New housing market data from Redfin is out, and it shows home prices still holding up, even as mortgage rates are punishing affordability for buyers. In today's video, we're going to be looking at why home prices haven't seen a significant correction as me and many others had expected. Let's get into it. This week we got new housing market data from Redfin, a national real estate brokerage, and it showed the median home price in the U.S. came in at $406,000 in October, down from the peak of $411,000 in May. This represents a 1.2% decline over 5 months. Now, I'll admit it, this is a far cry from the 10 to 20% decline by the end of 2022 that I had anticipated in several of my market update videos over the last 6 months or so. There's still 2 months of data for the year, but we're unlikely to see any big movements in that remaining time. This begs the question, why did I think it was going to go down that much? Well, primarily because of this. The surge in mortgage rates we've seen this year has pushed the average housing payment as a percent of income to historically high levels that are unsustainable. Simply put, the average person just can't afford a home given today's mortgage rates and median home price. Let's look at this in a classical economic framework to further explain why I expected a more prominent decline in home prices. Here's a generic example of the housing market. You have demand for housing and supply for housing. What the surge in mortgage rates did is essentially shift the demand curve back. People who are willing to pay the market price are no longer willing to do so because higher mortgage rates added additional cost. So as the demand curve shifts back, we see that there should be a new equilibrium price that is lower. It's basic economics. If demand collapses, prices need to come down in order to clear the market. It wasn't hard to see that coming given what the Fed had to do with interest rates this year to fight inflation. But something else happened that I did not expect. This. New listings over the last few months have absolutely plummeted, reaching the lowest level since October 2012 if we exclude the drop in the beginning of the pandemic. It turns out that not many owners want to list their homes at lower market prices. What this means in our economic framework is that in addition to demand shifting back, the supply curve shifted back as well. Sellers are not willing to sell at the new equilibrium price that resulted from the backward shift in demand. As the supply curve shifted back as well, look what happened to price. It went pretty much back to where it was to begin with. Both supply and demand shifted back, and the new market clearing price is basically the same as it was before, which is why we've seen hardly any decline in the national median home price. The big change, though, and you can see it here in our economic model, is that even though price has not changed much, the number of homes sold is now lower. This is evident in the number of sales, which has completely collapsed. Price hasn't moved much. We're just seeing much fewer homes transacting, as our economic framework showed would happen from a shift in both supply and demand. So that's where we are right now. What can we expect going forward? One key indicator is the sales to list price ratio. As of October, it came in at exactly 100 on a seasonally adjusted basis, which means that homes are selling at list price on average and the bidding wars are far behind us. If this indicator maintains its downward trend below 100, we'll likely see an acceleration in the month-over-month decline in the median home price. The trend in new listings will also be key to watch in the months to come. If we see it rebound without an upward movement in price or sales volumes, that could signal a change in seller psychology and they may be willing to accept lower prices. If none of that happens and the housing market remains frozen as it is now, then we'll have to wait for the Fed Reserve to finish up their interest rate campaign for mortgage rates to come down and change the calculus for home buyers. Regardless of what happens, I'll be covering it all as the new data comes in. So if you want to stay on top of everything in the housing market, make sure you're subscribed and hit that notification bell down below so you know right away when my next video comes out. And if you found this video helpful or at least mildly entertaining, go and hit that like button to support the channel and help it grow. Thanks for stopping by. I'll see you in the next video.